Hello dear traders, we have prepared a fresh review of the Asian session. Today we are going to discuss the movements of the US dollar and other currencies after the release of inflation data. Let's go! As widely expected, inflation figures were rather high and above expectations. The consumer price index jumped to 7.5% in January compared to a year ago. Annual inflation turned out to be the highest in the last 4 decades. Given Fed policymakers' statements and rising inflation, traders are now more confident about monetary policy tightening. The US stock market fell sharply yesterday, while the US dollar advanced significantly amid rate hike expectations. The US dollar index, which measures the strength of the greenback against a basket of 6 major rivals, aided gains yesterday. It kept growing versus its counterparts during the Asian session. Meanwhile, the euro is rather volatile. It dipped after the data release. Shortly after, it rose drastically and dropped again later on. The US dollar index has approached the 95.90 mark, aiming at the upper limit of the 95.81 and 96.05. The Nikkei is now moving in the green zone. The dollar-yen pair is also trading with a bullish bias. Yesterday, the price jumped by 86 pips, closing the day with a gain of 52 pips. So it may soon hit the level of 117.17. The pair keeps its steady growth. It has already approached 115.97. For instance, the price may try to break through the lower limit of 115.92 and 116.17. After that, it could either slide into a short-term correction or enter a sideways channel. If so, the greenback is likely to assert strength against the yen. Currently, the Bank of Japan is largely focused on curbing the growth of government bond yields. It also refrains from tightening monetary policy. This is why the US currency has greater chances to climb versus the yen. The Aussie may lose ground due to the same reasons. Market participants are pricing in the key rate hike by the Fed. At the same time, Reserve Bank of Australia Governor Philip Lowe prefers being patient as it's too risky to tighten monetary policy now. It means that the Reserve Bank is less hawkish than the Fed. The Australian dollar weakened versus the greenback following Lowe's dovish statements. Yesterday, the upper shadow of the daily candlestick touched the target level of 0.70 to 27. The AUD USD pair closed below the level of 0.7190. On the chart, there are signs of a downward movement. Now the pair is trading in the range of 0.7110 and 0.7169. However, the nearest target level is below the lower limit at the level of 0.7065, which is a high of June 2020. If the price hits this level, it's likely to nosedive to 0.6950. After having reached 0.7131, it keeps falling lower. And that's all for now. We hope you have had a productive and profitable week. Your feedback is appreciated. Feel free to leave your comments and ask questions. Have a wonderful weekend and see you in a few hours.